Hi and welcome back to Cheeky Crypto. My name is Nick and today guys, we're jumping down into the world of Bitcoin, specifically to take a look at the macro picture. We'll be taking a look at the daily charts, the weekly charts, just to kind of give us a view as to kind of what is going on, where we think things are going, bull traps, bear traps, all those kind of good stuff. And I think there's a few things going on here that can see both swings upwards and downwards in the market. So I want to kind of explain a lot of what's going on there. Now, as we kind of get into the video, you know what to do. Smash that like button, hit the subscribe button if you're new and all that kind of good stuff. Now, if you haven't yet signed up to BitGet, check it out, linked in the description below. BitGet is my go-to platform at the moment for all trading and spot activity. So if I'm just looking to build up a hodl position, I used to use Coinbase a lot and I used to use Binance a lot. I've actually turned more to BitGet now. It's growing quite massively. It's great on the fee structure. It's a lot cheaper than Coinbase and so forth. So definitely worth checking it out. Now, it's affiliate linked in the description below, which does mean that we get a small kickback on those fees that you generate if you do use BitGet via our link. And there are some fantastic offers available, such as deposit $50 USDT, get $10 USDT as cashback, all the way through to deposit bonuses up to $8,000 depending on how much you deposit and trade and so forth. So as I said, there's a link in the description below. If you are looking for a new exchange, then why not check it out, BitGet down in the description below. Now, if you do sign up to BitGet and you do use the link in the description down below, then you'll be able to join us down in Discord as well and take part in our weekly trading competitions where we have a prize pool of $100 USDT every single week for the person who generates the best ROI during the week. Okay, so it's a percentage point of view and P&L point of view on your portfolio. And so essentially what you can do is you can see whether or not you're going to come out top on that weekly list, and if you do, then you're going to earn an extra $100 in that week period. So this happens every single week. It's recurring, so why not check it out? Linked in the description below. Sign up to BitGet, take advantage of some of the fantastic offers there. Now, obviously, that's plugging done and dusted. Let's jump on over into the content. So what we're going to do is we're going to take a look at Bitcoin on a couple of different levels. Now, we have got the wallet count data and all that kind of good stuff. Now, there's not terribly too much unusual activity going on here, but if I do bring it up on the screen, you can kind of see what's been going on. We can see that there is a move to the downside when it comes to whale wallets, over 1,000 Bitcoin per wallet. We can see that they continue to come down a little bit. The Krakens had come down quite aggressively, so have the sharks. Other than that, there's not terribly too much more to kind of note. Inflows and outflows are pretty well balanced at the moment. And bring that up here, we can kind of see volumes are about half, or just about 40-something%, 45, 48% of what they were in 2019. So there isn't terribly too much to kind of note on the wallet kind of count side of things, or the inflows, the outflows. It's pretty much the same story that I've been talking about for a while. So no point in really trying to dive down into that at this point in time. I'll wait for some more data to kind of come in there, anything major movement wise, and we'll cover that. But what we'll do is we'll cover off the daily chart from an Elliott Wave theory point of view, smart money concepts, and then resistance and support, or supply and demand, and all that kind of stuff. So let's talk about bull traps and bear traps, right? So in the bearish markets, you have a lot of bull traps going on. You have these setups right here, here. In fact, I'm going to just draw a bunch of arrows on there because it makes it really quite apparent when you start seeing in the bearish markets all these traps that have been sprung. Okay, and then of course you have the bear traps that are getting sprung as well, right? Because it goes in both ways. Okay, you're trapping out and grabbing as much liquidity from as many of these different areas as possible. Okay, so it becomes quite clear that in a bullish market, you end up with these tilts to the downside, right? You have lower highs and lower lows. And a lot of people will tell you that that's a bearish sign. And they're not necessarily wrong, but they're not really taking a look at it at that macro level. Okay, lower lows and lower highs, yes, they are short-term bearish, but they don't actually give you a long-term bearish situation. They actually give you a more bullish long-term situation. And then in a bearish market, when you have all these higher highs and higher lows, on the short term, those are incredibly bullish, but on the macro level, they're incredibly bearish, right? Because you do have to break down from them eventually. And what you tend to find is there's a lot of influencers across different social media platforms that are going to basically be looking at the micro level stuff and not necessarily giving you the macro level. And that's rather unfortunate because you can take advantage of both of these situations. So when we end up with this bullish kind of move to the upside that we've had, this bear market rally, if you will, one of the big takeaways is that we have got these traps that are being sprung whilst we're actually in here. Okay, and we can see that most recently, if I actually just collapse this back down to about here, right, if I pull that in here, we can see that we had this trap here. Okay, we hit $31,000 to the penny according to Binance's USDT pair. Okay, and then we had this break to the downside. Now we did find ourselves with support to be found here on our 50 EMA, that's the red line, okay, and our 200 EMA is way down here. Now, what we've got going on here is also a potential bear trap at the same time as a bull trap, and that's quite unfortunate. You actually see one over here as well. If I grab a channel, just to kind of try to depict this the best I can for you guys, you can kind of see in here that we started tilting down, okay? And we could argue that maybe it was actually spread out a little bit further to the upside like this, and we just tilted like that. Okay, so we can actually see that we ended up with this situation. We broke up from it. We have a similar situation occurring right now over here. Now, this is at a macro level. I still suspect we have to come down before we can move on up, but we'll kind of mark this anyway. So I'll pull this down and we can kind of see we have ourselves a situation where we're looking for a break upwards from this channel. But we are in the early stages of this, in my opinion. So I would say that we're likely to move on down. We're going to lose the 50 EMA and we'll progress down and probably find support on that 200 EMA over the next week or two. Okay, and then from there we'll get that break upwards. That's kind of where I'm thinking. I could be wrong on that because ultimately there's one big bearish bull trap, in my opinion, the big bull trap of Bitcoin's 2023 chart, and that is actually something that spreads quite massively. It goes quite deep. So if I come over to the highs of August 2022, for example, to the recent highs we had over here, and we start pulling down a big channel here, we can start seeing ourselves with a big trap. Okay, now this particular trap could take us down into those lows that I was talking about yesterday, right? And this is the kind of the opposite situation of what we saw of the entire bear market from 2018. Okay, we can see here that actually we're probably nowhere near completing that journey. If we were to think of this bear market as a big channel to the downside, then we've still potentially got quite a bit of work to do. Okay, now we can look at this maybe from lots of different angles. We can say, well, maybe we've already broken out of a channel and it was more like this. Possible. I can't kind of dispute that entirely, but I don't think that's the most probable scenario based on a lot of stuff that's going on in the background. I think that's highly unlikely. I think if anything, considering we haven't had a Fed pivot, and the pivot is what's going to generate that big move to the downside, because when the Fed pivot, price goes down, doesn't go up, believe it or not. There's a historical reference to that. You can go back and check out various different years and when Fed have done a pivot, and you can see that actually price action goes in the opposite direction to what people would expect it to do so. So whilst we see interest rates increasing with the US Fed, we're potentially going to see some interesting volatility within the price action of Bitcoin. Ultimately, what I'm seeing here is a lot of liquidity grabbing situations occurring from market makers and your billionaires, your whale investors and things like that. So ultimately, we want to be really aware that we do have the potential for a small bearish trap to be set here. I don't think we're there yet. I still think there's a lot of hopium in terms of price moving up because it is quite high still in the price chart. But I'm expecting us to move down before we have that move upwards, when we kind of get that trap sprung. I don't think we'll necessarily pierce above the $31,000 at this point in time. We'll see how that kind of goes. But you can kind of see within these structures, we had this this bull trap here get sprung, we pushed back down, and we're now potentially in the making of a bearish trap. So we want to be aware of that. But ultimately, I still think that we're in a big bull trap here, the biggest bull trap of Bitcoin's history, and we still have this potential move all the way down into those crazy lows. I'd love that not to be the case, but I mean, what an opportunity that would be as well. So we want to bear that in mind. Now, if we take a look at this on a smart money concepts, you can see it even here. Higher highs and higher lows, these do have a tendency to get a big breakdown. Now, we know that there's fair value gaps all the way down at $17,000, which gives us a high probability that we have to revisit those areas. Now, I suspect there's a chance for new lower lows, but it's not a necessity. Okay, we don't have to do that. It is something that I suspect probably will happen because we do not see large institutional investors buying. Instead, they were selling down here at the November lows, and they were selling pretty much everywhere. And you can see that within the chart for the Bitcoin whales. Let me just bring that up on the chart here on the screen. As you can kind of see, they've just been selling, right? They've just been coming out of their positions. So it's really hard to think that, since they were selling the June lows over here and they were selling the November lows over here, and you can see them selling down and they're continuing to sell even into this move to the upside, it's hard to think that price action's not going to go down into a new low. It's highly likely that that big money isn't going to come in until we go down lower than the existing November lows. Okay, so we kind of have to bear in mind a few things here at those levels. The economy is an absolute shit show at the moment, and our large institutional investors are very much aligned to what Chris and myself are talking about: preserve capital. Wait until the rug is completely pulled and then choose the right moment to actually come on in. So for now, we can see these potential trap situations occurring. Big bull traps, the biggest bull trap in Bitcoin history potentially on the horizon here. And I said it before, we could, theoretically push up quite high. The only way you're really going to kind of break out of that structure is to have a healthy correction and then break past the $31,000 high. So we need to come down and then break past that local high in order to get that confirmation that you're in a bullish market. Otherwise, all you're really doing here is essentially it's just pushing up higher and higher and higher with no confirmation. And that to me just tells me that I don't want to be a part of a market that is potentially just being driven or manipulated in one particular direction. I'd much rather bide my time and wait for a better confirmation and a better entry on the market. Now, ultimately, we do have a bullish structure emerging, but it's yet to be confirmed. A lot of people kind of sometimes jump the gun, specifically when you start seeing change of characterizations between a bearish market to a bullish market or vice versa. However, really what you want to do is you want to get confirmation that we're in a bearish state of play before we actually jump into the market in any kind of way, or a bullish state of play before we jump into the market. So I look at this thing and I'm very, very cautious because we can see here that we've set ourselves up with some higher highs and higher lows, and essentially it doesn't give me the confidence in thinking that we are going to just continue going to the moon like this. And when we take a look at where we were previously, you have to have some kind of cooling off period before we actually continue that run upwards. Okay, so essentially if we were to think of this more as this bear market rally over here, right, we go into was that December 2019 over here, for example, right? We had this move upwards into 2020, then we had this big pull to the downside, right? We can see over here from the December 2018 lows, the bear market lows over this side, right? And we had that big run up, we had to come down. Okay, so really what we're waiting for is we're waiting for that big pull to the downside to kind of get us back aligned. You'll notice that we don't have to have a new lower low. I do suspect though, considering that during this time period, that a lot of those institutional whale players were buying. They were buying this, okay? Whereas at the moment, what we've got going on is those same institutional players selling this, okay? So we want to bear in mind that the wallet counts are decreasing. They're offloading their Bitcoin over to retail investors, and that's not a good recipe. So not only are we going higher highs, higher lows, tendency to see these bull traps and then break down from them. It's not a guarantee, but it's a high probability. We've been through that many times before. We also see that large institutional investors are avoiding buying into Bitcoin, and they're actually just offloading to retail investors. The retail investors with increased credit card debt, the retail investors with insufficient savings are the ones that are now piling into crypto, buying up the billionaires' assets. To me, that's a recipe for disaster. At some point, they're going to have to pay back their credit card debt. Okay, they're running out of savings to do that. And at some point, they are going to have to sell other assets in order to do so. So, not only do we see these things going on, but we also see damage in the housing market as well. We are seeing a demand for people downsizing in housing. Okay, we can see that demand. So although there is a demand for housing, the demand is kind of isolated to a small pocket. Not only do we see that, we also see fixed term mortgages coming to an end, specifically the fixed term mortgages that were driven from stimulus and furlough based checks and payments that were made. So people overstretched, got mortgages they couldn't afford, and now those interest rates are doubling their mortgage payments. You're seeing a necessity to exit those positions and exit those property, and because they cannot simply afford to continue living there, right? So there's a lot of things, a lot of catalysts going on here that a lot of people just simply are ignoring. These are fundamental things that we have to consider when retail are the ones propping up a market. Because if retail are the ones propping up a market and we're seeing ourselves higher highs, higher lows, and we're seeing increased credit card debt, insufficient savings, and we're seeing property crisis that's about to emerge, I would suspect that this market is about to drop pretty hard. But let me know what your thoughts are on all of that in the comments below. From our support and resistance or supply and demand areas, we can see quite clearly that we are now back up in this range of supply. Okay, this is a previous demand area. This is where people were buying and now they are potentially selling. As you can see, we lingered here for quite some time. This is a weekly chart, by the way, guys. So we can linger around here for a little bit, but ultimately we got rejected from it. Expectations are that we are to move down towards some of these key levels. More specifically, I think this is the big area that I've been talking about for pretty much a year. 11,600, 13,900. These are the areas, or this is the area that I think is hopefully the area that's going to hold out the best. Okay, I don't want us to come down lower. We scoped this out previously, 6.5 to 7,600 or whatever. I don't want to go down that low. I just want us to kind of get to a point where we see large institutional investors buying and the wallet counts are increasing at that 1,000 BTC wallet level while simultaneously decreasing at the 1 Bitcoin wallet level. Okay, we need to see retail coming out and we need to see whales coming in. Okay, we can't have everything rising up all together. It's a sum zero. Someone is buying, someone is selling, right? Someone is selling their Bitcoin to someone who wants to buy the Bitcoin and vice versa. So there's a winner, there's a loser. There's all these things you have to kind of consider. A balance between demand and supply. So there are lots of things to think about, lots of things to kind of keep in the back of our mind as we see price going in these directions. It's important that we reflect on the foundation and what underpins these price movements, which is the people who are buying, the people who are selling, and important that we understand the global economy, the state of play with the global economy, and what impact that may have on the very people who are currently buying and holding BTC. Let me know your thoughts in the comments down below. I'm going to leave the video right there. Smash the like button if you enjoyed it. If you're new, subscribe, and don't forget to join us down in Discord because that is the place to be. Linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.